Welcome back to FinTech Festival India's Bengaluru Micro Experience, everybody. Now, non-bank companies have been integrating financial services into a range of marketplaces and services in recent years. Embedded finances refer to the disruptive trend of technology companies playing a key part in the financial lives of peoples and enterprises. The embedded finance possibility is rising exponentially as trade and is digitized and alternative data for underwriting becomes available with the rise of B2B e-commerce platforms. Our next session will discuss the rise of embedded fintech in India and how it is transforming the MSME lending landscape. This panel is moderated by Mr. Kamaljeet Rastogi, Chief Executive Officer at Manipal Business Solutions Private Limited, who is joined by Rahul Jain, founder of All Cloud, and Mr. Sandesh Jayarama, Vice President of New Business Initiatives with Perfios Software Solutions Private Limited, Ms. Priyanka, co-founder and Chief Executive Officer at Falcon, and completing the panel is Mr. Sanket Shendure, founder at Minko or Minkspay. Over to you, Kamaljeet. The session is all yours.
Thank you, Amit. Thank you. Thanks a lot. India has 6.3 crore MSME. That makes it about 21 MSME to 20 Indians. So these are retail stores, workshops, small factories. I'm sure we can all relate to it. The amount of stores we see when we drive around or walk around. They are extremely crucial to our economy, just the sheer size and the sheer number. And that's why we even have a dedicated ministry for MSME. They provide large employment. Even if you take 1 or 2 people on average working in each MSME, that's 10% of Indians, right? At minimum, working in the MSME sector. They require low capital cost to set them up. And also, they are mainly set up in the rural or the tier 3 and 4 areas. So they provide industrialization, employment in those areas. So they are extremely crucial. And if India has to reach its $5 trillion economy target, MSME have to play a very important role. You know, as fintech industry players, we are here to discuss how fintech can contribute to their growth, how they can survive, thrive, and be more productive. According to Juniper Research report, embedded fintech was about $43 billion in industry in 2021 and is expected to go to $138 billion industry by 2026. So about 3x growth expected in 5 years. So what is embedded fintech? Tailoring and integrating solutions, financial services into the day-to-day operations of MSME is embedded fintech. So we have an excellent panel here coming from various fintechs who look at this problem from various sides. So I'm quite excited to have this panel and to hear their views, what they are doing in this space. So I would request each of the panelists, starting with Priyanka, just to introduce your company, what you do, and how are you looking at this problem from an overview point of view.
Thank you so much, Kamaljeet. I'm really excited to be here with everyone on the panel. I think everyone on this panel is doing some very important work towards making embedded fintech a reality in India, and you know, to sort of push its growth in the next 5 years. So I'm very happy to be here. Also very excited to introduce Falcon to everybody. We just came out of stealth a few days ago, in fact. So very happy to be part of this and tell you a little bit more about Falcon. We are an embedded payments and lending platform that helps startups and tech companies, fintechs, BFSI companies like NBFCs and banks and PPIs to launch their own payment and lending products using open APIs and no-code solutions. So today, of course, the trend that is ongoing in the market is that every company wants to become a fintech company. Everyone's talking about it, not only in India, but globally. And some of the reasons, of course, that this is true is because everybody's realizing that once you have access to, a large enough base of customers or MSMEs on your platform, by launching payment and lending products, you can get access to, number one, stickiness and loyalty, right? Number two, you can get access to more granular data, especially spend behavior in terms of where your customers are spending. So rather than an NBFC, let's say, dispersing a one-time loan into a bank account for a borrower, you suddenly can do things like co-branded credit cards and white label BNPL solutions, which allows you to actually understand, at a very granular level, where your borrowers are spending, right? Number three, this gives you access to a more diversified stream of revenue, right? So you get access to interchange revenue, interest income, float revenue, and other sources as well. And number four, which is very important, is that it allows you to completely automate your disbursement process. So today, for example, we're seeing a complete explosion of companies that want to launch these embedded payments and lending solutions. And the reason Falcon exists is because a lot of these companies, when they try to go directly to entities in the ecosystem, whether it is banks or NBFCs or lending companies or card networks to do these integrations, everybody understands that these integrations can end up taking a very long time, sometimes more than 8 to 12 months, very heavy cost also to it, right? So everyone is realizing that, similar to the revolution that has taken place with cloud infrastructure with AWS, or on the acquiring side, with folks like Stripe, Razorpay, PayU, all of those companies, that same kind of shift today is happening in issuance. So Falcon basically becomes that single issuance layer that companies can come to. They can tell us that they want to launch a solution such as a prepaid card, a credit card, a buy now, pay later solution, FASTag, anything that they want to launch. And we become that single issuance layer that enables them to do that without having to do any other integrations, right? We make it faster, we make it easier, and we make it cheaper. So that's us.
Great. Sandesh?
Yeah, hi Kamaljeet, and thanks a lot for the FinTech Festival to provide us this opportunity and to speak about our company and the kind of things that we're doing in this space. So I represent Perfios. It's a 13-year-old successful and well-established tech fin. We're working with close to over 270 financial institutions across India and the globe. Essentially, we are helping our clients, which is basically banks, fintechs, NBFCs, in simplifying their lending through our very innovative products and also helping the lending ecosystem get more efficient through our data and the analytics-led solution. So just to add on to what Kamaljeet actually said initially about the whole MSME space, as you know, it's the as he already said, that it's the lifeline of the country. They contribute to about 30% of the GDP of the country. 48% of the total exports are from the sector. 95% of the industrial units are belonging to the MSME sector. And also, employ close to about 40% of the country's workforce. However, the surprising thing is that they just take about 6 to 7% of the credit share. So there's a huge gap in the credit that is required, and this is about $1 trillion is what has been estimated, and this definitely needs to be bridged. So hence the technology as a technology company, we are helping bridge this gap through some of our innovative offerings, and one of it is basically called PCG, or Perfios Credit Gateway. And what it does is basically it helps borrowers connect to all the potential lenders through a very plug-and-play BNPL-like proposition made exclusively for SMEs. Now, just to put it in context, imagine a scenario where an MSME, say a restaurant owner who is on an aggregator or a marketplace like Swiggy. I'm just taking an example here. And this guy is running a very successful business and great traction through Swiggy. And he wants to expand his business, and for which he needs some loan. So what we essentially enable is a single button which could be enabled or embedded into a Swiggy app for the MSME. And on click of a button, he instantly gets a loan offer from, say, 5 banks and 6 fintechs and few NBFCs as well, so that he's got a platter of options to choose from. And so that is essentially the use case that we are right now enabling and helping both the demand side, which is the borrowers, and the supply side, which is the lenders, and also make it easy for the marketplace and lucrative for them as well to introduce this feature. So that's basically what we are right now doing in this particular space, and I'm hoping that this sees more interest in the market and hopes to bridge that gap that is currently there in the market. Thank you.
Interesting, Sandesh. Rahul? Rahul?
Rahul, you're on mute.
Hi. It's phenomenal to be on this panel today. It's great working with FinTech Festival as well. We've had multiple interactions, and I'm sure what they're doing is going a long way in enabling companies such as ours be more available to discussions and present what we're doing. AllCloud is an enterprise solution, enterprise SaaS solution for payments and lending. We've deeply aligned to building a core technology for fintechs and payment solution providers, enabling them to scale using our solution. So what we do is we provide the core technology, and they can do the innovation around it. We've been working for the last 6 years with various NBFCs, enabling them to create solutions on our core technology platform. From enabling a large insurance company embed credit as a product in their portfolio, to working with MSME lenders, create relevant solutions for their borrowers, also getting them integrated on large e-commerce platforms, to working with various small NBFCs, create very domain-specific solutions. So our core technology is a unified one-stop solution for the entire loan life cycle, right from how they originate loans, how they take a credit decision. If data points are available through various third-party sources, we align them together. If they are not, then we help them create credit models that are very unique to their processes. And then this enables them to lend better. We've seen most of the lending that is happening to MSMEs is more very specific to what they do. It has to be looked at individually, and it can't be stereotyped. So what we do is we enable these models, we help them lend better, evaluate the customer better, and then the whole loan life cycle is managed well on our platform. So this is been our journey. It's been very enriching. Working with more than 75 NBFCs today across India, a couple of banks. We've evolved through the journey, and we definitely see embedded FinTech as a huge opportunity in this space.
Great. Sanket, over to you.
Hi, thanks a lot for having me here. It's really great to see embedded fintech has become more familiar as a terminology than what it was 2 or 3 years ago, right? So I'm a co-founder at Minko. So what we are building at Minko is nothing but a buy now pay later experience, what end customers like you and me can enjoy on Amazon or Flipkart at the checkout page. We thought, why not this similar experience can be accessible to small kirana store owner or a small retailer out there in any tier 2, tier 3 town when he wants to procure any inventory or any goods from his suppliers of, let's say, Unilever, Britannia, Parle, right? Because today there are 14 million kirana store owners or small retail, so mom and pop store owners who contribute to this entire 63 million MSMEs or SME space, right? And they contribute to the 90% of the consumption in India today. And what we realized is less than 10% of these small mom and pop store owners do have an access to overdraft or CC facility, like a credit product where they can use it as and when they require. And this is one of the innovation in the lending industry, which was really needed for a very long time. But the buy now pay later has always been looked as a massive market for end customers. But I think so beyond that, the B2B transactions in India, which is almost like $250 to $300 billion in India today, from retailer to distributor leg of payments, happens in the mode of cash or happens in the mode of check. And to change this, I mean, the way how we have seen disruption in last 2 to 3 years because of UPI, next 2 to 3 years is all about disruption between B2B payments, between retailer to distributor leg. And that is definitely going to happen with the kind of embedded layer of payment plus credit which you're going to introduce there. And that is what we are trying to solve for.
Excellent, exciting. So Priyanka, you talked about stickiness and automation in disbursements. Sandesh, your message on the low credit share of MSME compared to the 95% share in industrial units. I think that's a huge gap, and very interesting to hear that how Perfios is trying to address this gap. Rahul, you talked about the platform that your company's provided, the end-to-end loan lifecycle platform. And Sanket, you can see the enthusiasm and young energy in disrupting the payments, the B2B payment space. So great. So let's move on to the second part, which is, the individual questions that I have for each one of you. Starting with you, Rahul. So how does lending at POS help the MSME and the consumer?
I think POS lending is one of the most wide application of embedded fintech. It has emerged as a new operating system for MSMEs and driving their growth. Merchants offering pay later solutions and short-term loans has become a norm, and it's within a few clicks. This has really enabled the way consumers have a choice of credit. It is in a way democratized how credit is delivered to consumers, and also for the MSMEs, they have been able to own the relationship through and through. So if they had to have a separate credit system, not very much in the loan customer journey, it would have been two different relationships. But now an MSME can own the complete relationship, including the credit. And that's given the power to MSMEs to sell better. Many reports have reported that there has been a much increase in the true value in the high value per transaction, more transactions in MSMEs, and that too digitally. This is also because more and more consumers are spending digitally now. I think also fintech-led innovations which have integrated and collaborated between payment providers, digital lenders, and the MSMEs themselves has very clearly gone a little more further, enabling MSMEs to deliver this credit. Also, digital lenders have integrated their solutions with MSMEs, which gives them a lot of capability and strengthened their tech systems, including API-driven capabilities, building credit models, and delivering that credit instantly. This has further fueled MSMEs' growth. They have seen increased transaction, and from a point of sale perspective, it's very clear. It's at that point the credit is delivered when it is needed the most. So MSMEs have definitely benefited with POS lending.
Okay, so be there at the right time and the right place.
Yes, definitely.
Perfect. Over to you, Priyanka. Can you share some case studies on how Falcon is helping MSME with its build to build with philosophy that I noticed on your website? So can you elaborate a bit more on that and
Sure.
some case studies also?
Absolutely, Kamaljeet. So, when we say build to build with, we are actually a B2B2C platform. So think of us as a backbone for a lot of the major use cases that have to take place, with respect to digital lending, whether it is for MSMEs or retail customers. So one of the very first use cases, actually, Falcon has a very interesting evolution story in terms of, how we got here. So one of the very first white spaces that my co-founder and I found exciting was that of commercial payments. We saw that, some of the largest banks in India, both private and public, would have obviously access to a very large captive customer base, right? Some of the banks that we work with today, for example, have access to more than 15 million MSMEs as their captive base, right? But because, the core focus area for a lot of these banks has been, large, of course, debt lines and CASA, for them, commercial payment solutions, which these MSMEs required on a daily basis, which in turn feeds into the entire lending pipeline, right? And into the entire data pipeline. Those commercial payment solutions, were not really as much of a priority, right? They didn't have the agility in terms of a platform to be able to go to market quickly with things like, vendor payments, GST, custom payments, payroll, spend management, commercial cards, BNPL, right? To be able to give to these customers. So we actually started our journey by looking at that white space. We created a B2B2C model where we started to work with some of the largest banks in the country, with neobanks, with even vertical SaaS companies that wanted to embed these solutions into their own, software and card a lot of the transactions. And we gave them both front-end as well as back-end solutions, right? Both open APIs as well as white label ready dashboards and, end user applications. And this was, one of the very first use cases that ended up becoming very successful for us, right? So today, a lot of MSMEs through the Falcon platform are able to access these payment solutions so that can further sort of, enable real-time data as well as sort of credit history building for them, and then further sort of, enable them to get access to on-tap loans. So that was one of the first journeys. But as we, evolved, as this started sort of shaping up, a lot of NBFCs, Kamaljeet, started coming to us, right? And they told us that, instead of just, like I said early on, dispersing a loan into an MSME's bank account, right? We want more of an interaction with this company, right? Once we acquire the company, we want to be able to, have a high frequency usage product with them. We want to be able to drive purpose-driven transactions, right? So we started to work on, some very interesting just-in-time funding models, both for NBFCs as well as for e-commerce companies and marketplaces. So today, for example, a lot of companies are using our platform to enable just-in-time loans, whether it is through UPI or on a card product, right, a co-branded card product, in a way that, let's say that you're giving a 20,000 weekly limit to a micro entrepreneur, right, to complete orders on the ground. That 20,000 does not have to be preloaded on the card at once, right, on a prepaid card. Every time that there is a transaction, let's say for 500 rupees, there is a real-time API hit, so that in real time that 500 rupees gets unlocked, right? So what essentially happens over here is that number one, there is liquidity optimization. So you only keep float for the 2 or 3 days of the transactions that you need to. Number two, there can be no misuse of the card, right? There can be no misuse of the loan. And number three, of course, I've already mentioned that you get access to a lot more data points. There's a lot more automation in terms of disbursement. Similarly, we are doing a lot of interesting use cases for NBFCs that want to activate real-time OD limits and invoice discounting for their customers, right? We are working with wealth management companies. We are working with agri-tech companies that want to create an entire, lending ecosystem for their farmers at the last mile. So these are just some of the, use cases, and I'm very excited to see that every single day, every second use case that we're getting is actually connected to digital lending.
Excellent. I think both you and Rahul talked about timing, just-in-time loans, being there at the right time, and also data collection. Obviously these are the two critical points. So moving on to you, Sanket, I believe you are working for distributors and retailers of companies like Unilever, Cadbury, Pepsi. So can you just explain the journey? Earlier you mentioned that you want to make the purchase experience similar to the Amazon checkout. So just take us through the detail how the experience for the MSME happens when they want to access these services.
Yes, sure. So Kamaljeet, the way how it works is, if you have heard of the companies like Jumbo Tail, Udaan, Shop Kirana, or Metro Wholesale, right? These are the platforms which cater to almost like 8 to 9% of retailers or Kirana store owners in the country. And these retailers usually procure inventory from these apps. And at the checkout page, they get a pay later experience of up to 30 days. So they by default get the credit of almost 20 to 30 days, because these large platforms have been able to partner with the larger NBFCs or fintechs who can power that credit with the kind of data what they are sitting on. And what we realized is the remaining 90% of the market is still being driven by traditional distributors which are appointed by the FMCG companies likes of Unilever, Britannia, Parle, all these guys. And these are operational in each district or each geography, managing 500 to 1,000 retail stores and their supplies. The idea is, as soon as they generate an invoice and deliver the product to them, they either demand a payment from them in the form of cash check, and hardly less than 10% of retailers are able to get credit from these distributors in the informal way. But the remaining 90% of the retailers who still want credit are unable to get credit because distributors' business is distribution and not providing credit. And that is where we realize there is a huge gap there. I mean, there are plug and play BNPL stack built for all e-commerce platforms like Jumbo Tail, Udaan, or all these guys. Why not build a plug and play credit and payment stack or a buy now pay later stack for these traditional distributors? And the whole idea here was, why not create a very specific closed loop credit limit against that supplier, right? So for an example, let's say you are a distributor of Unilever in a particular geography and you are supplying to 1,000 retailers, and you are able to facilitate credit in the informal way to less than 10% of your retailer base. What we do is we come on board, we tell you we can facilitate this remaining 80 to 90% retailers of credit, but it will be powered by NBFC partners which we work in the background. Okay. And the entire underwriting piece has been taken care by us. The reason here is a lot of NBFCs cannot go individually acquire these customers. The retailers complete their KYC, complete their underwriting, because underwriting is a major roadblock for NBFCs, because these small retailers don't have proper GST data, bank statement, ITR written, balance sheet to underwrite on. And that is where we analyze last 12 to 15 months purchase data and repayment data, which is sitting in the accounting system of these distributors to underwrite these retailers. And our system makes the decision on what's the consumption pattern and what's the repayment pattern and how much risk NBFC should take against this retailer and activate a credit limit. So this is how instant decision making happens, and a retailer is able to get an experience to click on pay now or pay later as soon as a digital copy of invoice comes into his inbox in Minko app against this Unilever distributor. So this is the experience which we are trying to create.
Some data you can share about, any critical data that you use to measure the effectiveness of the service?
So again, at this point of time, right now, like we work with 110 distributors across 4 states in India. That is Karnataka, Maharashtra, Gujarat, and Bihar. So the cities like Patna, Surat, Pune, Kolhapur, Mysore, these are the tier 2, tier 3 towns where we have started our journey with. And we almost have onboarded 10,000 retailers and powered more than 5,000 micro ticket size credit against their supplies, and we have disbursed more than $2 million in last 8 months.
What about the ticket size and the time it takes to from application to disbursement?
Yes, ticket size here ranges somewhere from 25,000 to 30,000 rupees, and with a tenure of 5 days up to 30 days, and a retailer can opt for how much days he wants to enjoy this credit facility, and interest is only applicable for number of days he uses that credit facility for. So that brings in the entire flexibility and decision in his own hand of how much days he wants to enjoy this credit.
And the TAT from application to disbursement of the funds?
So the TAT here is instant, because as soon as the retailer gets an invoice in their inbox and clicks on pay later, a distributor gets the payment directly from the NBFC on a T+1.
Okay. Amazing. Great. All right, Sandesh, I believe you have studied the challenges that are there on the supply side for MSME. So we would like to hear more from you on that.
Sure. Thanks, Kamaljeet. So on the supply side, which is basically the lender, if you look at it, the problem statement that is there is very similar to that of a groom searching for a bride. What I mean by that is, like, the groom, he wants the best girl in town. He doesn't want to spend too much money to woo her. He wouldn't want to believe everything that the girl speaks about herself. Right? So what is the option that he's got? He's probably going to go subscribe to a shadi.com or a bharatmatrimony.com and outsource this responsibility to them and get the best bride. Basically outsource it to them to get the best bride from across the country. Now, exactly the same kind of a problem statement for the lenders as well. So the biggest problem, of course, one is the high cost of acquisition. Now, because lenders don't want to be a local player catering to only local businesses alone, to avoid segmentation risk and all that. So they would want to spend more on, like, say, AdWords and distribution and say DSAs, manpower required for that, or even KYC process. It's not very cheap to do that when it comes to the physical KYC verification. So that's one of the primary problem statement that a lender faces. Second is, of course, a lack of consented and trustworthy information and data for underwriting, because information plays a very vital role. And no data makes a digital journey very difficult to enable. And third problem is essentially about the typical one-size-fits-all type of a traditional approach, which makes it difficult for them to maneuver in the new digital age, especially compliance and risk. It's not tuned for the rapid change in the process and the product development. So that's, again, a hindrance that is self-made by a lot of these larger lenders that are out there. So this is where the product that I was mentioning about, PCG, comes into picture, and we're currently working with the bulk of the lenders in the country, where through our PCG offering, we are helping the lenders reach out to the maximum number of borrowers as possible with the least amount of friction. Now, just as an example, we have the first technology platform to onboard 2 large banks and 2 fintechs as well onto the GEM marketplace. Now, what is GEM? GEM is the government e-commerce marketplace. It's currently having close to about 3 lakh SMEs registered on it. It's still in a very nascent stage. Just about last month, we saw about 214 crores of application loan application processed, which is in a range of about 100 rupees to about 20 lakh rupees that were actually applied on this particular platform. And basically, these are based on invoices that are backed by the government. So we help in 2 ways. One is build a tech stack and make integration as easy as eating a piece of cake. And that's exactly how easy the tech integration is going to be for both the lenders as well as, of course, the marketplace. And second one is basically help the lenders process alternate data. For example, like what even earlier Sanket was speaking about, and Rahul as well. There's a lot of alternate data that is available, like the business vintage, the POs that are there, the buyer and seller profile, GST data, bank statement also. All this comes in together quite strongly when we start using this information in our credit decisioning model. So banks are adopting this and seeing quite great advantage coming out of this kind of a platform. And yeah, hopefully we are able to solve for most of the problem statement that the banks currently have.
Okay, fantastic. Fantastic. Just Sandesh, continuing a follow-up question. There's a lot of new infrastructure which is coming up in the country, right. Account aggregators, OCEN and all. So maybe briefly, how do you see this is going to further enhance, your platform or, the whole
Sure.
ecosystem? How do you think it's going to help?
Yeah, that's a great question because, open banking as a concept, it's caught on the regulators and innovators' eyes throughout the world. A world over fintechs are catching up with this concept of introducing newer and newer innovations on top of this open stack. So same with India. First, we had the UPI, which basically gave power to, say, third parties to innovate on payments on top of a standard protocol. But then the question is, why restrict it to payments alone? And why not extend to other use cases? And that is where or account aggregation comes in. So if UPI is about open payments, account aggregation is about open passbook. And by passbook, I mean balances and transaction narrations, right? So on top of the open passbook is where the innovations can be built. And OCEN is one of those amazing innovations that is essentially enabling open lending. So OCEN basically stands for Open Credit Enablement Network. Now, what it does is it essentially lays out a highway on which a lender and a borrower can travel to meet each other without too much of friction and do business. Right? So OCEN enables ease of getting all the required customer consented data as well and passing that in a certain format to all the lenders for the lenders to be able to take a wise credit decision. So thus, all the frictions that are involved in the lending value chain could be very much simplified in the OCEN standard, and you'll have a lot more participation and a lot more offerings coming for the borrower who's out there looking for a loan. So we at Perfios are also taking this OCEN standard a notch further, while we are fully compliant with the OCEN stack and which is ready to use. What we are also doing is that we are adding ready-made out-of-the-box adapters for getting customers, which is our clients, going onto the platform from day one itself, without having to worry about 100 things like data partnership, business partnership, even technical integration. All of this is kind of, we've sorted all of that and essentially give a single plug and play component, which the clients of ours could essentially use and go with lending on the Open stack from day one.
Okay, excellent, excellent. Yeah, so we have a lot of questions coming in from the audience, so I want to thank them for that and request them to keep them coming. And we definitely want to leave a lot of time to address it sufficiently. So Priyanka, over to you quickly. You know, we always want regulators and government to do more. So anything quickly that you believe we want the regulators to do?
Right, Kamaljeet. So I think that, it's interesting. We've all been, of course, there's a lot of chatter going on about what regulators can do about OK and NEA. But I think what's really interesting to us also is the other side of the equation, right? Which is that once the loan has actually been dispersed, how is this loan used, right? Which is the last mile of the entire delivery cycle. So I think what's been interesting is that a lot of the rural loans that have been so far given out, right? Usually because of the lack of an acquiring infrastructure in those areas, usually the loan is just taken out of an ATM as a cash withdrawal, and there is no real data in terms of where this money is spent, right? And with the lack of that data, what ends up happening is that you're not able to further build credit histories, and therefore a lot of borrowers are not able to access government schemes such as the Emergency Credit Line Guarantee Scheme, right? So what we are pushing for and recommending is that the government incentivizes acquiring infrastructure, including the zero capex or low capex soft POS terminals, right? As well as have a relook at the MDR structure, right? So that a lot of these last mile payment solutions are enabled, and all of us can get access to more granular data, which is what we're all going for.
Okay, great, great. So Rahul, over to you. Pandemic, we are all waiting for it to become endemic. But what is the impact on MSME, and how has embedded fintech helped MSMEs overcome the impact of the pandemic?
Well, to put it simply, I think the resilience that we all talk about, the India resilience, how we've grown from the pandemic, I think 10% of that should be allocated to the MSMEs, since in a way, 10% of the population is either employed by the MSMEs or are in touch with the MSMEs. Where large organizations have, probably been caught on the wrong foot in this pandemic, MSMEs were one of the first to be able to adopt and to be aligned to the new way of doing things. Where you'll see very quickly they acquired the payment platforms. I mean, they went on to the POS machines, they accepted UPI. Even a Sabjiwala or a Tea Point is now accepting UPI very quickly. These transactions, which were credit invisible earlier, have now been visible. And this MSMEs have understood this very clearly, that the more transactions they're able to show, the more data they're able to be made available to lenders. Lenders will use that, exploit the data, and give them better solutions. So they've been the first to jump onto the bandwagon of digital payments, digital collections, and also get into the banking transaction space. With that, they've now got better credit solutions, very much designed, tailor-made for them. So definitely more than 80% of the MSMEs today have digital as a strategy in them. They're thinking about it. And with the more and more adoption, the government being facilitated of so many platforms, it will grow. And when I look at from our perspective as well, we've seen MSME lending become a very important part of the whole NBFC's larger planning as well. They want to lend to MSMEs because now they're able to create the data model. They're able to work with them. They know the transactions, they know the collections, they know what point to lend and what point to collect. So NBFCs have seen a great interest in MSMEs, and I think they'll grow. The extent is that they're able to deliver credit, and they're also able to, on the other side, MSMEs, lending companies are able to collaborate with banks. So a co-lending model where they deliver the credit and it is then backed up by a larger bank. So we've seen that also. I think MSMEs have really exploited the pandemic. We know how to work with situations that are not conducive to us, and MSMEs have been at the forefront of this one.
Excellent, excellent. Sanket, at the end, I think I would like to ask you, where do you see embedded fintech for MSME in the next 3 to 4 years?
Yes, so I think so. It's going to be really interesting because I think the way how having less than 3% credit cards. The credit card penetration in India is to less than 3%, right? Like, in spite of having that, we have seen a skyrocketed growth in terms of the consumption on e-commerce platform, whether it is for Big Billion Day or for Great India Festival Sale on Amazon or Flipkart. And majority of it is powered by a cardless credit with a BNPL stack there. Okay. And I think so the same trend is going to be visible even in a B2B market. Like, small retailers are going to consume a lot of these credit products and financial banking products from the embedded stack out there. And we are trying to like build that layer to facilitate not just credit, but beyond that, like, we have now just rolled out something like a gold SIP. On every invoice what they pay, they can by default park 5 rupees, 10 rupees in the digital gold account. So the whole idea is, it's subconsciously they are able to create gold SIPs, gold investments, and ultimately, like, the whole idea is now very recently now few banks has also started accepting digital gold as a collateral to bring down the interest rate if someone wants to enjoy a low interest rate working capital loan. And this is something as an innovation which we are yet to see, and it's not too far. That's what I look at it with the kind of digitization happening in all these tier 2, tier 3 towns as well.
Excellent, exciting. So we have about 5 minutes remaining. We'll try to take as many questions as we can. Let's start with the first one. This is an audience question. I'll just read it out. All parts of the lending infrastructure has evolved, but the core LMS providers are still rigid and traditional in their approach. What changes can we expect in the future? Without the flexibility in LMS, innovation cannot be sustained. This is an audience question. So Rahul, would you like to take it?
Definitely. Yeah. I think innovation in lending technology needs to come. And what we have seen is that from an enterprise SaaS perspective, we've seen the scalability of our solution. And definitely traditional LMS providers will not be relevant to the technology for tomorrow, because there's so much of innovation happening at the origination front, the credit assessment front, and also in how the loans are being paid and collected. The flexibility of APIs, a core technology that is scalable, integratable, and also that delivers to what a borrower wants, not what a lender wants, is more important. The innovation that you will see in LMS is that more and more SaaS adaptability, because a solution that is relevant to the complete industry is being built at one place. And it's, the use cases are different, but the core technology remains the same. I think that's the innovation that will come in the next days.
Okay. Moving to the next question. This is, okay, I'll just read it out. From a BNPL perspective, right now, banks are watching the space very closely. In the long run, would distribution, which banks have, beat product innovations which fintechs bring in? Priyanka, want to take this question?
Sure. So Kamaljeet, how we are seeing this is that, as with any other instrument that has come about in the last 5 years, right? Whether you look at payment gateway aggregation, or you look at prepaid cards or credit cards or even UPI, right? You see that, wherever banks may not really see a direct core focus area. And that's, it holds true for BNPL as well, right? Because the kind of audience that BNPL is looking at, right, that BNPL is targeting, that's not currently in line with the core audience that the banks want to target, right? So essentially what has happened with all of these instruments, and that is what we see happening with BNPL as well, is that banks more than ever before, right, especially accelerated by COVID, are realizing that they want to partner with fintechs, right, on two fronts. So on the one hand, in terms of the technology platforms that fintechs are able to bring with respect to speed, agility, and a lot of the innovation that we've been talking about on this panel today, right? Banks want access to that kind of technology, right? Because they realize that they can move much faster by letting fintechs manage some of those, parts of the process. The second thing is that, even with respect to distribution, actually, as has been happening with other instruments, fintechs actually bring, very large layer of distribution for banks, right? So today, a lot of banks come to us and tell us that, instead of working with 50 or 100 fintechs on our own, we want you to become, the middleware or the layer in between, and then sort of use some of the bases of these fintechs to get access to a larger market, right? So I believe that, more than that clear competitive sort of line between banks versus fintechs, this is going to have that same story playing out, that there will be more and more collaboration and partnership taking place, right?
Excellent, excellent. I think, in summary, I would say it's a huge market for all entrepreneurs. I think that's the first criteria. And all of you are addressing the problem in your ways. I hope this discussion has encouraged more people to look at the problem and look at the solutions, especially in the fintech space. So with that, I would like to thank all of you, the panelists, and also the audience for joining this session.
₹100 में बिटकॉइन ट्रेडिंग
पॉसिबल है?
इम्पॉसिबल।
लगी शर्त और हारा तो It's possible on CoinSwitch Kuber. Download करो और बिटकॉइन में ट्रेडिंग स्टार्ट। CoinSwitch Kuber, सिक्का चमकेगा।
Cryptocurrency is an unregulated digital asset, not a legal tender, and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.